China has cut one of its key lending rates in an effort to spur the recovery of the world's second largest economy. China's economy is still growing, but at a slower rate than was previously expected. That's due to a worsening property slump, weak consumer spending, and tumbling credit growth. The country's central bank has now cut one rate while leaving some others untouched, surprising experts who had expected further reaching measures. Joining us now is George Magnus, an associate at the China Center at Oxford University. Welcome to DW. What impact is this interest rate cut going to have?
Well, I don't think it's really going to have very much effect at all, really. I mean, the one-year rate, which was reduced by 15 basis points, is really sort of an interest rate that really influences the rates at which companies borrow. The 5-year rate, which they left unchanged, would be a rate that affects mortgage rates. So that's one that possibly could spur additional household demand for mortgages and for property, potentially. But they decided not to touch that. And I mean, the reason that's being given really, or that's being floating around, is that the People's Bank of China was trying to balance, some measures to positively affect the economy with also not wanting to prejudice the margins of the banking system, which have been shrinking. In other words, bank profitability has been declining, and they didn't want to cut mortgage interest rates even further. But I mean, this is really a band-aid solution. This is not really going to solve the problem or the problems in China's real estate market.
So, but the idea to trying it on a monetary way, is that the right way to do it?
Well, I don't think the problem in the real estate market is because interest rates are too high and people can't afford to borrow. I mean, there are other reasons that clients and citizens don't really want to borrow money to buy houses at the moment. I mean, the interest rate reduction will help beleaguered financial situation in some of the big developers like Country Garden and some of the other companies that are in trouble. But again, I just want to stress that I think that this is not something that monetary policy is likely to do anything durable to correct. There may be some measures coming on the budgetary side, on the fiscal side, which will help, but we'll have to see what happens there.
Let's talk about those in a second. First of all, could China be heading for a liquidity trap here when consumers and investors are hoarding cash rather than spending it?
Well, yes, that is kind of what's going on. I mean, in a way, companies have not really, private companies, that is, have not really been hiring a lot of people, not spending a lot of money on investment. I mean, the numbers for private investment have been distorted a little bit or influenced by what's been going on in real estate, which is really bad. And sort of outside of real estate, private companies are still investing a bit, but the numbers are pretty weak. Households are not really borrowing. There's been quite a lot of anecdotal stories about households paying off their mortgages, not taking out new mortgages. So confidence is really shot. Nobody really wants to kind of stick their neck, over the parapet. And I think this is the danger is, yes, that people just hoard cash, sit on cash, don't want to spend, don't want to borrow. This is a situation that a lot of developed countries have seen, like 10 years ago over Lehman's and so on and so forth. So we'll have to watch this very carefully.
And George, if monetary signals don't seem to impress anybody, what would be a way to address the problems that the Chinese economy is facing right now?
Well, I think, just to stop things deteriorating, the government could, of course, allow or announce some measures, fiscal measures or regulatory measures to allow, people easier conditions to borrow, lower down payments on mortgages. They could offer budgetary support to property developers to deliver the properties which a lot of people buy on a what's called a pre-sale basis. In other words, they buy the property with a mortgage before the construction has even started or whilst it's underway. So what the government needs to do is to try to spur demand for housing, but at the same time take some of the supply out of the market, because although the situation is not great in cities like Beijing and Shanghai, Shenzhen and so on, in the smaller cities, like hundreds and hundreds of smaller cities, there's a chronic excess of housing and of apartments. So there are short-term measures the government could do, but eventually, you just have to allow the sector to shrink. It's like a quarter of the economy, and there is not enough, first-time buyers, not enough households being formed anew to support the volume of building that's going on. So it's a long adjustment that will have to take place. And in 10 years' time, the property sector will be much smaller than it is today.
And at the same time, the plight of China's property giant Evergrande appears to have worsened. Does this point to a wider problem in China's economic stability?
Well, Evergrande has now become the sort of poster child, really, for what's wrong with the property sector in China. In other words, it was allowed to boom for too long. And, like 2 years ago, it kind of tipped over, and we're now in 2 years into a housing bust, basically. And this bust could go on for quite a long time. I don't mean that, every single month we'll have unrelenting bad news, but, the sector really is in a lot of trouble. And of course, we are watchful, because the danger is there could be contagion, as there always is with real estate problems, into the financial sector as well. So these are things the government will have to pay very careful attention to.
And if we widen our view here even more, do all these problems that the Chinese economy is facing right now make it less likely that it'll offer debt relief to developing nations?
I think it's like a parallel issue. I mean, I think the problems what we've had or that have existed between China wanting to sort out financial arrangements bilaterally with emerging and developing countries, say in Africa and some in Asia that have got into trouble, that's quite separate really from the domestic problems to do with the real estate sector, to be honest. I mean, ultimately, the question we always ask in kind of economic and political economic thinking is, who is going to pay? And so, the real estate sector is a huge question of who's going to pay. And with some of the debt relief that's required for a lot of developing countries and countries in the Belt and Road universe, the question is who's going to pay for the bad debt. Now, obviously, the central government of China, the Beijing government, obviously is going to have to bear some of the costs of those bad loans that have been extended by some of the big banks and the development banks. But they're all charges on the balance sheet of the central government. But I think they are dwarfed in a way by what's going on in real estate.
George Magnus from Oxford University, thank you for your thoughts.
Thank you.
Among the numerous countries which have received loans from China in recent years is Montenegro. The small country in the southeast of Europe used the cash to have a highway built and is now facing more than just credit installments.
41 kilometers in 30 minutes. After 7 years of construction and €1 billion spent, this road to the mountains of Montenegro is ready to be used. It was built by a Chinese company with workers flown in from China. And it was financed with a loan also from China. The highway is great, just great, from Kolashin to Podgorica. Kolashin is a popular destination for hikers in summer, for ski tourists in winter. Ever since the road has been completed, tourism is booming. Revenue is up threefold at Katarina's little ice cream shack.
We are connected with other towns. We have many tourists now. We come here in a shorter time, and I think it's good.
Motorists have to pay a toll of €3.50 to use the new highway. But it's hard to imagine that the billion-dollar investment will be recouped that way. Natasha Kovacevic works for a non-governmental organization and has been criticizing the project for a while. She says the 41-kilometer stretch is an immense burden on the country's budget.
We have income from the highway, which is 9 million euros annually, and we have a loan rate, which is for the half of year, and it's about 40 million euros. So it's obvious that we can't cover the loan with what we have, and that we have to put this remaining money from the budget.
Another problem, the highway leads to the Tara River Valley. The river is a UNESCO World Heritage Site. It's known for its crystal clear water and green banks. Except the highway has destroyed all life in the lower parts of the river. There are no more plants here. The banks have been washed out entirely. Tons of excavation material have been deposited here. What's left on the once beautiful environment, rocks and leftover construction steel. All the trash has turned the water muddy.
Basically, this grey mood is coming from different excavations, but also coming from these dump sites, which have this flushing of sediments, and this is actually what they're destroying a riverbed, but also biodiversity. Just, with the covering it, other species are staying without the food.
Over in Montenegro's capital city of Podgorica, no one seems to be in charge. No one's answering questions. And then the 41-kilometer highway comes to a sudden end. China has offered to extend another loan to keep building, but the government found that too risky. They know if they only miss one payment, Beijing has the right to confiscate state property.